Hello traders, Gary Wagner with the gold forecast. About 12:30 in Honolulu, Hawaii, 24th day of February, Thursday, and this is the daily report. Gold under pressure this morning, currently trading about 1401, 1402, bid-ask spread, putting it down about $9 to $10 lower. We are looking at a 240-minute Henkin chart. And in that Henkin chart, I've basically run a very quick Fibonacci retracement, and that retracement is just from this final move from 1308 up to the top, and I believe that last night the top that we hit was either 1418 or 1419, right in this area right here. And of course, we did see that market come down. Now, the intraday low that we had was 1393. And as you can see, this 1392 is very close, obviously, to finding that support at that 23% retracement level. Now, when we took our long position the other day, I did say that we wanted to reserve half of our capital in case the market came down so that we can dollar cost average. That's obviously what we're going to look to do at this point. Now, my sentiment is that I want to see this market find a little bit more support, and we will look to scale or add to the current long position that we have. Traders, we are looking at a 60-minute, basically a box chart, and it's similar to candlesticks in that it draws a rectangle, but this draws a rectangle around the high and low rather than the open and close. And the reason for me putting this chart up today is we can see this is that significant support area that we have, that one band of support. You can see that we formed, at least on a tentative basis, what I believe to be a pretty concrete bottom right in here, but we want to see if that pans out. If we find good support in this area, as I said, we are going to look to scale that position and to add to that position. But I think that we can see on this 60-minute chart that there does appear as though, at least tentatively, we did find support, and that market, of course, is back over $1,400. Traders, we are looking at a weekly average chart, the Japanese average chart. Of course, you can see this last week right in here. And the reason for bringing this up as our final chart of the day is that when we take a look at this defined up channel and uptrend, we've absolutely in no way violated it, one. The second thing that I am noticing is even with that sell-off, on a weekly chart, you can see the absolute strength that this weekly candle still holds even after selling off, as I said, about $9 here. So my belief is that we are still headed higher, and I am going to look at these dips and corrections as points and entry level points for us to add positions to. We'll talk about that tomorrow. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.